So we started just with us as co-founders, and then I'd already invested, but we were still trying to raise more money, raise seed funding. And someone said, okay, you might think that you want to go find rich people that you know in your network and ask them for money. But actually, one piece of advice we got was, go look for people who've written similar checks. So if you go to Crunchbase Insights or one of these sites that tells you about people who've written similar checks, and you're going to start an online marketplace, look for people in San Francisco, in Silicon Valley, who've written checks for $50K, $100K to fund online marketplaces. And that person is likely to be the sort of person who's going to want to write you a $50K, $100K check for your online marketplace. Now, the same person who gave us this piece of advice also gave us advice on raising from Sand Hill Road. So I don't know whether this is completely true, but this is what I was told. Now, caveat this, I've been at Google, so I really didn't know anything about raising money from Sand Hill Road. But what we were told was, okay, take the fund size and divide by 50 and then ask for that much money. And that was the math. And so they said, look, the partners, they don't want to be on tons of boards, so they want to fund 25, 30 companies from their fund. But they want to fund 25, 30, but they want to have some money. So they want to give enough money so they have some in reserve, just in case. And then once you've asked for that much money, then multiply by 5, and that's your valuation. So I'm not saying this is perfect advice, but this is what we were told, right?